Hello YouTube. Right now I'm going to do a Robinhood Portfolio video. I have not done a video in about, I want to say 3 to 4 weeks, but I'm going to go ahead and do this Robinhood Portfolio video. A lot of things in my life have gotten busy, so I haven't had the time to really sit down and do a Robinhood Portfolio video or the M1 Finance videos, but I'm going to quickly talk about what changes I have been doing inside the portfolio. Let's talk about how the portfolio has been doing for the week. I'm up $41. Past month, I'm up $537, and the past 3 months, I'm up a grand, so 6%. So the portfolio has reached a landmark here, $21,228. So I'm over the $20,000 mark. Really good to see here. There's a lot of compound investments going on in portfolio. I have been moving some stuff around. I haven't really been looking at my portfolio all too much, but I still buy and sell. I still do some swing trading. How I think that's going to help the portfolio grow. Let's quickly talk about the portfolio, guys. I'm just going to jump right into it. Apple 208. My position, 3 shares, 172 right now. Total return up $108, 20%. So Apple's been crushing it. Microsoft reported earnings today, and I think they hit $1 trillion market cap. So I think that stock hit $130. So if you're holding on to Microsoft right now, you're doing pretty well, I would say. But Apple, pretty good company. I like Apple a lot. At the time when I bought it, I thought the valuation was pretty good, 172. I wish I would have bought more shares, but it is what it is. Costco, let's quickly talk about Costco, 247. Let's quickly look at my shares. 3, average cost, 246. I'm up $5 on this for a 0.77 percentage return. So it's a recent stock that I bought recently. What stock did I have like in the last video? I don't even remember. I think it was Walgreens, and yeah, actually I was gonna buy some more Walgreens. I think it got down to like $53, and I'm like, man, this is just so good. I'm happy that it got down to $53. But I also listened to the earnings call, and the earnings call was not very good, guys. Basically, the CEO said that I don't remember exactly what he said, but it was along the lines of, I hope everyone gets sick, and I hope everyone goes to Walgreens to get better, or something like that. He didn't actually say that, but it was along those lines, and I'm like, what is this company doing? So, but it was not a good earnings report. They pretty much dropped everything. They dropped the ball on everything, but Walgreens still dividend aristocrat, pretty good buy. The reason why I got out of stock was because I saw other opportunities elsewhere. I'm not afraid to admit that. Like, if I see other opportunities elsewhere, I definitely will jump on those opportunities. And real estate has been getting beat up pretty bad here. I think real estate took a nosedive these past couple of weeks, and I think healthcare has been getting slaughtered too. So that was a good opportunity. It's kind of odd because Walgreens is sort of like a retail slash healthcare stock, but a lot of these pharmaceutical healthcare stocks are getting beaten up. AbbVie, Pfizer, United Health went down like 12%. Those are good opportunities to get, better average companies, above average companies into the portfolio. But Costco, yeah, I went with Costco because I like Costco a lot. I mentioned this before, it needs no explanation. The Costco pizza, the Costco lines, the Costco memberships. Costco is a very solid stock, and it's definitely a buy and hold. But right now at all-time highs, so I only bought 3 shares. McDonald's, same thing. 197, like them a lot. I like the restaurants. I like what they're doing. I like how they're getting rid of the lines. Average cost 194, very high for this stock. The stock is massively overvalued, but I don't care because I know that I'm going to be getting paid some pretty fat dividends coming up, and McDonald's does give me some recession-proof protection. So total return of $8.94, 194. McDonald's will probably go to 200. If they have a good earnings report, they'll probably go to like 205 or something like that. So pretty good stock. I like McDonald's a lot. They have been very good to me in the past, and I bought some McDonald's. So next stock in my portfolio, Johnson & Johnson, has made a return back into the portfolio, 10 shares. Average cost a bit high, 139. Johnson Johnson. So I know about the whole talent powder issue, and Johnson & Johnson is kind of overvalued at these levels. But again, I don't care because I know I'm going to get paid some pretty nice dividends, and I know Johnson & Johnson is another dividend aristocrat, just like Walgreens was. But with Johnson & Johnson now, I don't even need Walgreens. Shares 10. I'm down on them, unfortunately, $4, but pretty good hold. They're going to pay a $9 dividend, and I like Johnson & Johnson a lot. Johnson & Johnson has been a part of my journey for like forever. Since the earlier videos, I've always liked Johnson and Johnson. They've always found a way to make it back into my portfolio, and I always sort of just give up on it. I don't know why I just do that, but I've made some pretty good money from Johnson and Johnson. I remember my average cost in the earlier videos was like $120, and I cashed out and made like $200 or something like that. So yeah, Johnson Johnson is back, and I hope this thing keeps running up because I really like them a lot. Let's take a look at Enbridge, $37. I still think they're a good buy. Shares 25. They recently announced their what they're going to be paying for their dividends. It's going to be for every share $74. So I'm going to be paid, I think, around $18, which is pretty good, guys. When you start getting paid these little $14, $25, $14 every month, that stuff adds up over time. So total return, some nice capital appreciation, $25.86. Today was a pretty good day. Enbridge is still, to me, it's still undervalued. I still think there's time to get in. That's a pretty good stock. Gives you some nice diversification outside the U.S. It's a Canadian energy stock. But yeah, it's a really good company that's been reliably increasing their dividends over time. I just like them. I like them at these levels, and I'll probably buy more if it ever reaches back down to $30 again. I think they're a reasonable price for Enbridge is probably like $40 or so. Let's take a look at AT&T. Not a good day for AT&T. They did report earnings. I think the revenue was in line, but they may have missed on revenue. I got to look at the Seeking Alpha report again, and the earnings call. It's the same noise with AT&T. We have a lot of debt. We're trying to pay off our debt, but shares keep going down. Shares keep getting stagnant. Hey, people are wondering, hey, when are they going to cut that dividend? But I'm holding the fort here. 50 shares. I'm down $18. But that dividend is going to make up for that because I'm going to get paid $25.50 on May 1st, 2019. So again, those juicy dividends that I really like. Enbridge is going to pay like $18. AT&T is going to pay like $25. McDonald's is going to start kicking in. Apple, all these companies that start paying their dividends. But the companies that I was focusing on was, these little small companies. I wouldn't say small companies because AT&T is a very large company, but these companies where you can buy a lot of shares of them and, get paid a pretty good dividend amount. So AT&T, not a good day. Again, earnings report. I think the earnings report was not very good. Of course, it was not very good. The stock dumped 4% today, but a pretty good buy still, in my opinion. AT&T is too big to fail. So this market cap is still at 233 billion. So they're not going anywhere, guys. I don't know why people keep saying AT&T is just going to disappear. They're not disappearing. So new residential investment, $16.83. Let's take a look at my position, 50 shares, average cost $16.62. A pretty good day for them, up $4 or total return up $10.50. But new residential investment, the reason why I bought them is because I had them in my portfolio before. I really liked this mortgage real estate investment trust, but it's really hard, guys, to find a company that pays in that January timeframe. You have January, April, July. It's really hard to find a good company that get a massive dividend on those months. So this will pay on January, it'll pay in April, it'll pay in I think July, but excuse me. New residential investment plays, again, a fat dividend. It has a pretty high dividend yield, 14%. And a lot of people have been wondering, how can they sustain that 14%? Because that is absolutely high. And they've been able to sustain it, which is quite impressive to me. They've been able to sustain that dividend and pay that 50-cent dividend. So, I missed the dividend, the ex-dividend date, but I don't care. I got 50 shares now, and I'll probably, as long as they don't cut the dividend, this stock is going to print money like there's no tomorrow. This is another $25 that it synchronizes pretty well with AT&T and Enbridge because they pay on different months. So I'll always get a pretty fat dividend from new residential investment, AT&T, because AT&T pays in like February and the next 3 months after that. And Enbridge pays on March and then the next 3 months after that. So they all synchronize together, and I'm always going to get paid a fat dividend on each and every month. So Vanguard total stock market ETFs. So now we're heading to our ETFs. Let's take a look at my position. 50 shares, 121.67. Nothing was sold. Total return a grand. So 1,396 of 22% on this. Buy and hold. Just buy it, hold it, don't touch it. You'll get paid very handsomely. It's a nice capital appreciation, and you'll get paid $38.60. So, once that starts kicking in, and then all these other dividend payments start kicking in, you pretty much can put this on autopilot and not have to do anything and get paid massively with these high dividend paying ETFs and stocks. Schwab U.S. Dividend Equity ETF, $54.55. Some really nice capital appreciation, 209 up 8%. Shares 50, nothing was sold. Let's take a look at the dividend. Last time they paid it was March, and I got paid $17.60. I think the dividend yield is still, I don't think it's at 3% anymore. It might be like closer to like 290 or something like that. But this is another ETF that, put it on autopilot, let it work for you, and it will pay you $17.60 for doing absolutely nothing. And the last ETF in the portfolio is PowerShares S&P 500 ETF, 100 shares, average cost 38. So again, nice capital appreciation, 394 up 10%. Not a really good day. Actually, they haven't having a pretty bad week here. Stock was all the way. This ETF was all the way up to 42.62, and then it took a massive nosedive. Kind of. The real estate has been getting beat up last week, so. Let's take a look at the dividends. I've actually, since I had 100 shares, I thought about doing some covered calls with SPHD, but SPHD is not an ETF that's very liquid, so it's going to probably be hard to sell those covered calls and obtain the premium. So probably just let this thing ride it. I don't have to touch it. I don't have to really do anything with SPHD. Let's take a look at that dividend. Yes, I will be getting paid monthly April 30th of 2019. And you're going to pay another $14. So dividends starting to compound. They just keep compounding and over again. And it doesn't matter what you do, you just keep sitting there and you just keep getting paid. Dividend for April, $14. For May, $14. For February, $14. For January, you got paid $10. And from then, I just hold it. Like, what more can you do? You keep getting paid those dividends, and it just keeps on adding up. So, SPHD is one of my favorite ETFs. All three of these ETFs are some of my favorites. But guys, it's gonna do it for the portfolio. There's 7 stocks and 3 ETFs in the portfolio. The portfolio has had a landmark $21,228. But the real glory for this portfolio is that these dividends, man, I'm telling you guys, these dividends are kicking in, and the good times are rolling. We're starting to see how the portfolio is really kicking it into high gear here, and not doing anything, getting paid for it is the best way to go, at least in my opinion. And then you can see some nice capital appreciation as long as stocks goes up. There's some dividend aristocrats in here. There's some, I would say, some risky choices like new residential investment, but it is a calculated risk. It's a calculated risk that I like. I want to get paid in January. I want to get paid in April. I want to get paid in July, and I want to get paid very well for those those months. So that's going to do it, guys. I'm going to cut the video right here. Again, $21,228. I am down $73 today. I've seen worse days than this, but I'm going to cut the video here, and I'll see you guys next time.